No, no, that was actually for something else. Complete, not trading related. All right, so yeah, today is Thursday. Thursday, May 21st, 2015. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a loyal client. We do these sessions because we want you to be a success. So consider it that TradersWay is investing into your successful future up front. And when you feel confident enough to open a live account, that you'll pay it back. And your loyalty will turn into a live trading account, and you and TradersWay will become long-term successful trading partners, and they will be your prime broker. How nice is that? So let's do some strategy. Let's fire the show up, huh? Wyatt made 400 pips while he was sleeping. Hey, well, congratulations. I hope some of those pips were from things that I've taught you. It's all me. No, it's all you. Yeah, no, good job. So you went from hero to zero starting in January, huh? Excellent job. That's what I want to hear. Now, start out small with your live account. Transfer $1 million to TradersWay. Just start small. In any case, hey, let me remind you that trading and investing is risky and not appropriate for everyone. Your past performance, good or bad, does not predict future results. Therefore, stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. When these sessions are over, I immediately download the recording and upload it to YouTube, and then write a little description and all that kind of stuff. Yeah, you know what? It takes another half an hour of my time, and I charge about $1,000 an hour. So it's a big deal, and it's because I care. If you missed the session, or if you need to go back and review something that was covered, it'll be at youtube.com/C, as in channel, /TradersWay. And that repository of knowledge is available at your fingertips and mobile devices. All right, so we had FOMC 18 minutes. Guess what? The Fed's not going to raise interest rates. What a shock. It's amazing, isn't it? So yeah, okay, fine. What was one of the things we talked about yesterday? I said the media minutes will come out. People will find out that they're not going to raise interest rates anytime soon. The dollar will probably weaken. And which currency pair would I like to long? Pound dollar or euro dollar? Yeah, pig dog. Why? Because I'm much more bullish on the British pound than I am on the euro. And there's the result after FOMC. Let me zoom in. That's an hourly, so you can kind of guess. But it's been more uppish than downish, right? Cool, man. That's all. That's all. I'm more bullish on the British pound than euro. Easy enough, right? British pound also was firmer, as you could see, going into the European session. Better than expected retail sales for April. Good job. Good job going out there buying iPhone 6s. Yeah, excellent job. BlackRock bond chief stated that they expect the Bank of England to raise interest rates this year, or at least discuss it. I was hanging out with a guy at from Bear Stearns who worked with the guy from BlackRock who brought in the Chinese sovereign fund. You guys remember this back in the day? I don't know, 5 or 6 years ago, right the financial crisis. It was China's first investment into the United States as a sovereign fund. They bought into something, I can't remember what it was. And maybe it was even BlackRock. You know what? Maybe it was. Maybe that was the triangle of fun. So what happened? Bear Stearns goes out of business, basically, right? The Chinese sovereign wealth fund that put in their first billions and billions of dollars into whatever was recommended, they lost every penny of that. And the trader that set it all up to help everybody lose everything, he got a $20 million bonus for doing his job. Everybody lost money. He got a $20 million bonus, and then the company went out of business, and he was trying to sell me his summer house. Isn't it funny how the world works? What? Everybody lost their shirt. Yeah, but I got a $20 million bonus on top of my $5 million a year salary. So anyways, BlackRock is just funny. What a funny world we live in. USD moved off its highs, and we got a BOJ decision coming up, as you know. Well, they did the deal, right, Fernando? You know, Buzz, I haven't been paying attention to that part, so I'm not sure. And it's all over the place, though. All right. Economic data coming out today. Baltic Dry Index. You know, that it's printing like 600 now. It was 1,500 earlier this year. I mean, just amazing. But at least it's bottomed out at like 450. Now, I don't know, what is it, 650? So it'd be interesting to see Baltic Dry Index to at least, you know, get closer to 1,000. Jobless claims coming out. Fine. South Africa is going to make an interest rate decision. Somebody was telling me they were getting into the exotics for carries. Who's that person here? They're looking at ZAR and Turkish lira and stuff like that. No? Well, anyways, get ready for that. And then, you know, important but probably not game-changing information will come out today. PMI, Philly Fed, existing home sales. You know, all these things are good, right? You just don't want to see bad numbers. Draghi's flapping his lips today. And remember, we've been expecting the unexpected to happen, where he says, I'll do whatever it takes to weaken the euro. That'd be great. So we'll see what happens there. Maybe, probably nothing. But he might say something. And then the Bank of Japan is going to make their policy statement. So you learned a lot recently, right? The FOMC, the MPC, getting some info and intel out of South Africa and out of Japan. We're going to learn a little bit about the ECB. Just lots of good information out there. Was that you, Ronnie? Doing ZAR yen? Cool. Well, just imagine, guys. I told a story several weeks ago about FX Concepts, and it was the first Forex-focused hedge fund in the world, and it was started about 30 years ago by a guy named John Taylor, who paid himself $250 million a year salary. It's not bad as a simple currency trader. They went out of business when central banks around the world went to ZIRP, zero interest rate policy, and they couldn't make any money. Because eventually what these big funds were doing is if they could find a way to, sort of hedge the volatility in a basket of currencies in such a way that maybe you didn't make any money on pips, but you'd make money on the interest rate, it was a good business, especially when you're dealing with billions of dollars, right? Now, why was that so important? Look at, like, right here. If you look at the difference in carry trade, the difference in carry between the yen and the rand, right? Let's dumb it down, say it's 5.5%. Are you leveraged 100 on? All right. So if you could hold your ZAR yen for 1 year and not make any pips, 365 days from now, you get busted out at break even. You didn't make a pip. The interest that you collected was approximately 500% ROI. Because you're getting paid interest on the money that the money you borrowed. So you can see, like, 550% return on investment per year is pretty good for essentially doing nothing, right? Now that's 550% of the money that you have invested, right? So you put up 1,000, but you actually got 100,000. So you put up 1,000, and you're getting paid 5.5% interest rate that you're clearing as profit because you're borrowing the yen and then investing into the rand. So you're making 550% interest on your $1,000 because you're getting paid on the 100,000. You see what I mean? So at the end of 1 year, you'd have $5,500. Nice, huh? And you say, well, Wayne, that's only $1,000. Well, what if it was $1 billion? How would you like to turn $1 billion into $5.5 billion in 12 months? Now, what if you actually made some pips too? Oy vey, right? So anyways, their fund after about 30 or 40 years of trading went out of business, not because they made big bets, just because A, they couldn't make any money, and B, they got redemptions like crazy because other hedge funds were exploding. So their investors were just saying, give us our money back because we're so scared. Plus, you're not doing anything with it anyways, and that's everybody bought treasuries. Remember that? When in the United States, interest rates actually went negative? That's because so poor John Taylor, he only had a couple of billion to live on, but he was an old man. It's time for him to take a break. Okay, this is my proprietary basket. They're all indexes. So this is the British pound. British pound is very strong. This is the euro. On the last hour, it's pretty neutral. This is the Swiss franc versus everything. It's slightly strong. Japanese yen. Japanese yen versus all other currencies, extremely weak. So how about right off the bat, a pound yen trade could be interesting, right? Or this is the US dollar. Dollar is weak. Aussie's weak. CAD is weak. Kiwi is weak. Wow. So British pound must be ripper strong. So pound yen long, pound dollar long, pound Swissy? No. Pound euro pound? No. So anyways, that's how I use this. Okay. I just make an index out of every currency. I think that's all I got. Yeah, that's old. All right, cool. So that's that. You're caught up. Welcome to today. So, trade plan here would be like this. Any thoughts? I mean, I went pretty fast, right? But yeah, what's going on? Well, I see the midpoint cycle level. I see the 21. And it seems to me the trend is up. You could also look for fib zones. But it's all about the same, right? Now, if you're a buyer, you're going to do the other way, right? You would know the low. But it seems to me if it's been so strong so long, I wouldn't be too aggressive as a bear. I'd find something else, right? But if you're a bear, this is where you'd look for a flip to the downside. So on like a 5-minute chart, I would look for, you know, something like this. So maybe not this up cycle, or I mean not this down cycle, but the next. Maybe next trade, maybe this trade will be better than the last. Yeah, you could use the weekly pivot point, sure. Okay. But if you're that's if you're a bull, right? Then it don't matter none anyways. You're going to make your decision, right? So you find your pivot. So like, for example, I'd like this to go up. Okay, good. So when is the 15-minute ready to go up? No. So I'm not ready emotionally. But this would be more interesting down here, and I'd like to see the oscillator down here. Seems like that could take a half an hour. So what I could do is drop into a 5, and I could trade 5-minute cycles. So I prefer this to, I'd prefer to take the next one on. I mean, this would be interesting in here. But if you were really scalping, you want to scalp this up because you're very aggressive, you could just long the next 5A cross and put a stop here. I mean, we're not talking about a lot of pips, right? As far as loss. Yeah, so Alan, that's basically what I'm discussing now. Alan's, you know, what do you do to pull the trigger? I tend to make my decisions up here in the longer time frames, 1 hour, 4 hour daily. Once I've made my decision, so let's say I want this to go up. Now the next part, I tend to drop into a 15-minute chart and check the Stokes cycle. Is it ready? Yes or no. If it is, then I drop into the 5-minute, and I'm looking for any reason to pull the trigger. As long as we're at support, we're getting reversal patterns of any kind. Could just be a 5A cross, could be a 1, 2, 3. I mean, it depends on the situation, right? Why 15? Because I love the 15. $15-minute chart's probably the most perfect chart ever. So here's a 5-minute cycle. If you were just skip scalping along because you were so aggressive, ask yourself, are you aggressive? If you're aggressive, you could take this long. Okay? All you're doing is buying a 5-minute chart when it's way oversold. Okay? That's it. Well, guys, so again, my general theme is on the time frame, I make a decision. Once I've made my decision, I'm done for the day. So let's say I look at the 4-hour chart, okay? Very easy long here. Very, very easy. Look at this. So down in there, when we're in this roll reversal, I just say, I want to buy. Done. Next. I mean, literally, it could take me 5 seconds. I want to buy. But at that point, it's straight down, right? When do you buy? So let's try to mark this. So that's fair. As accurate as possible. So then I say, okay, I want to buy. It's not complicated. I want to buy in there. It's oversold on the 4-hour. I want to buy at the roll reversal. I'm bullish. Blah blah blah. Easy, right? Okay, drop into the 15-minute chart. Is it ready yet? Not until about here. When the re-enters the trade zone. And, well, that's really about it. What's the other way of trading this? Okay. Got your double bottom now. Then what? Then the higher high. Hammock. What do you do on a hammock scenario? When I say hammock, what do you do? Fib, thank you. You're trained like a dog. And the sweet spot is going to be somewhere between the 382 and 618 Fibonacci retracement on a roll reversal. You see it? Roll reversals there too. So if you missed this one, that's fine. If you missed this one, okay, well, you should have caught that. After this, then you absolutely have to have caught this. Okay? So look at the 15-minute chart, guys. Oscillator on this one. Okay, so you weren't ready. Okay, any of these. Because remember, if it's not at the, see these ones here, are you at support? No, not tradable. Are you at support here? Yes. This is where amateurs get all confused because they're trading oscillators and stuff when you're not at support and resistance. If you're not at support and resistance, whatever you see is noise. Okay, remember, like, understand what the math is telling you. This algorithm is just measuring the price's ability to make higher highs or higher lows, or sorry, lower lows relative to the previous candles. So when you're getting these moves from oversold to overbought to oversold, but you're not going from support and resistance, all it's telling you is that it isn't moving. If you're at support or resistance, now it's important. Now it's oversold at support. Okay. Fine. So this one is definitely something you could have been on. Double. At some point, it breaks the high. That's your new launch. Trading 101, right? It doesn't get much easier. New higher high, comes back, roll reversal, long and gone, right? Now, obviously, this dramatic move is news related, but it happens. I think the only, without the news, it would have gone up, just not with that velocity. Okay. Oh, Eric wants to know about the which stochastic. I just use stochastic oscillator. There, yeah, I'm using simple. Be a simple kind of man. Can you do this for me, son? If you can. Yeah, oh yeah, that just happened. So Wayne, do you think this is a good swing trade? Do I think it? You can't. I think it's very difficult for you to make that decision if you haven't made a medium to longer term decision on the trade. So I've been buying the British pound for what? I don't know, since April. Who remembers what turned me bullish in April? In fact, the middle of April. What turned me bullish in the middle of April? The IMF report. Ha! And we talked about at least a month before it came out as being the probable catalyst, right? Fine. So I've been bullish since before we even hit the bottom. Because technically, or let's say fundamentally, I wasn't bullish because of IMF. What was I? IMF only confirmed it and therefore helped other people recognize it. What was it? Because Carney told me. The guy in charge of the Bank of England, you know, him. That's why I was bullish on the British pound, but it hadn't been confirmed yet, not until the IMF, and this actually was the day the IMF report came out. So anyway, so so you tend to get lucky a lot when you're trading in the direction of your bias, like that news event coming out. All right, I didn't know it was going to be that good. How would I? But when you're trading in the direction of your prevailing trend, in particular when you're right, you get paid, right? Now look how difficult this trading's been on the 4-hour chart. Okay? It's very, very difficult, right? Came down, made a 382 Fibonacci retracement, became oversold, started to rise. Buy it. Up, 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 up. Down, 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 down. Roll, reversal. Oversold. Buy it. Up, 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 up. Down, 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 down. Roll, reversal. Oversold. Yeah, this is really hard, guys. It's only hard if you don't take the time to make a plan. That's a 4-hour chart. You only have like 3 or 4 days to prepare, guys. It's moving pretty quickly. In this case, Alan, you use them in conjunction with the pullback. So what some people do incorrectly, of course, Alan, is they buy here, they sell here. They buy here, they sell here in an uptrend. Okay? And I don't, in a trendy market, I don't use oscillators that way. Okay? Yeah, Ron, yeah, great one. Ron says, don't forget the message from yesterday. If you're not waiting, you don't have a plan. So, yeah, you had, in each one of these situations, you have time to prepare. You know, because you can say, well, Wayne, oh, this is all just hindsight. It was all down, blah, 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 blah. You know, keep fooling yourself. Okay? So anyways, that's a trend trade. I do, like in the reverse, Alan, if we were doing this, I'm still going to do price action. The most important thing is once I've made a lower low, I grab the old support and now it becomes resistance. I do that over and over and over again. Okay? I tend to look for where the 382 and 618 is, but it doesn't necessarily have to be that. It doesn't necessarily have to be the roll reversal. I tend to look for the oscillators in reverse where I only sell rallies. But you don't need really all of those things. Okay? They're all helpful. So, right? But I don't trade the range, or I don't trade both ways in a trending market. I mean, another classic scenario, if you've seen my videos over the years, you get a 2155 cross, so I'm a bull. And I used to teach that being the swing trade. And you're long as long as the 21 is above the 55. That was something that I taught 10 years ago when technical analysis was extremely new and traders were very new trading. Okay, now I think you can get smarter than that in your trading, but you can see in this case that simple 2155 cross, which represents the market, that's why to me it's a swing, it is a first good start. But when I see a 2155 cross, I say, all right, the market's now bullish. The thing that I used to teach is after the 2155 cross up, you take the next 5A cross long. So it puts you there. Okay? And then you take profit here. And then you take the next 5A cross long here. Then you take profit here, and then you take the 5A cross long here. Meanwhile, following the 2155 all the way. That was the more advanced stuff that I taught, 10 years ago. And that used to blow people away. And in my book, I call the opposite trades here centrifugal trades, where you could trade, they're valid trades, but because they're counter trend, I look at them as half the reward and twice the risk. And the analogy I use is centrifugal force versus centripetal force. Okay, and we all know if you had a heavy, a 3-pound weight at the end of the string, right? If you had a 3-pound weight at the end of this, here, let me change the color of this thing. A 3-pound weight at the end of the string, and you're spinning this around in circles, right? Centrifugal force does what? Looks like I've been in college too long. What does centrifugal force do? Which way does the ball want to fly? The ball wants to fly away. The faster you spin it, the more it wants to go in that direction, correct? And that's, to me, the trend. The trend wants to go this way. The trend wants to go up. Everything it wants, it so much wants to go up. But there's an equal and opposite force. Why doesn't the string break? Because it has an equal and potentially greater force in the opposite direction, and that's the centrifugal part. And that's what I look at, the difference between the trend trade and the counter trend. The trend trade, the counter trend. So centrifugal versus centrifugal. That's how I used to look at the market, where I asked myself, which way does this market naturally want to go, and how can I help it? Oh, it's totally valid. I've been teaching it for so long, nobody on the planet knows it. Because I had to sit and look at the charts for years to come up with all that nonsense. I mean, it's just my way of describing the world. It makes sense to me. Right? But, you know, this is why I ask you guys to ask questions, because it seems easy enough to me. So I just assume everyone's having a huge success. And if you're not, you need to ask, and I'm willing to share and help. Well, Alan, it's not necessarily accelerating in the opposite direction until you reverse the trend. So one of the themes I've been trying to teach you guys recently is that it will stay bullish until it stops being bullish. That's how I want you to think. I want you to think with 100% certainty. So you can look me in the eye and say, Wayne, this is going up. This is going up. And that's it. There's nothing, there's no doubt. Okay? You buy at support on. That's it. Until what? When do you stop doing that? It does something like this. Now I'm a bear. I'm going to sell the next rally, and it's probably going to be in this roll reversal, and I'm going to sell here, doing the opposite. Okay? I used to use the roll reversal as a place to buy. Now I'm using the roll reversal as a place to sell. Okay? So I think we did that with, I think we did that, what was it, last week? It was the one that YJ took because of what I said. And it had to do with the EURUSD, where Euro had dropped a bit. Oh, I forget what it was. And anyways, I needed the reversal pattern before I can get in on it. Well, Wyatt, you're quoting people that I taught how to trade years before they became coaches. So a lot of their quotes are just quotes from me, which is cool. I mean, that's why I love watching their old videos and stuff, because they smile. Oh my God, are you serious? Of course. They studied with me for years before they became coaches. Good guys, that's why I hired them. Yeah, no. Of course. So anyways, just pay attention into here. If you were a bear, I would get pretty serious here and here. I'm not a bear, so if I wanted this to come down, I would just switch over to Euro USD because I want Euro USD to go down. I want pound dollar to go up. Yeah, I think David was a member of FX Bootcamp for, I don't know, 2 or 3 years. Then he worked for me as a coach for 5 years, something like that. I helped Rob. Rob was a great guy, and he ran a very large company. I don't think I should say, but as a from as an engineer, and he used to like apparently like 250 days out of the year he was traveling on airplanes. He's the type of guy that would be in Europe, Latin America, and Asia in all the same week. And when I first met with him, he's like, Wayne, I need to do well enough in Forex that I can quit my job. I just want to live in one place where it's warm and I want to be with my family. I want to start a family, all this kind of stuff, right? And Forex is going to help me. So we worked on it for years, and he was the type of guy where I loved his engineering mind, where he would break down his process in a beautiful way. So he made a great coach because he was so thorough and detailed and focused. I mean, that's the thing. It comes down to your success, guys, comes down to your ability to focus and work hard. Um, Mark, Mark wants to know about one-on-one training and stuff. I generally don't do that anymore, but there are things that can be done, but very expensive, and I don't have any time. I generally do it as a way to kind of help, but I don't know. I don't know. Email me. Yeah, I don't know. Email me. But I generally don't have time. But it's funny how things happen. So so let me go back to what I was saying. The people that have become successful are the ones that focus, right? That have unbelievable discipline and incredible work ethic. Okay? So I'll say, "Hey Mark, send me an email." And you won't do it, and that's it. That's my easy way to say no. When I tell people just send me an email, nobody ever does. So there's my big barrier to entry. Send me an email, convince me. Who knows, right? So, but that's what happens. You need to do that. There's lots of people that want to be successful, but very few people actually try, right? So anyways, but the ones that try have a chance. You know that saying, 80% of it is showing up? I don't believe that at all. My philosophy is 80% of it is not sucking. That's my book on success. So anyways, we're waiting for this to head up so it can go down, right? You guys remember doing this yesterday? Even though it had fallen and somebody you know bought it? Who bought it yesterday after that big, huge down day? Who was that? Oh, shoot, that was me. So I bought it. Why? It's at support. Why wouldn't it go up? So what, an amateur would keep selling, right? Excuse me. Amateur would keep selling, right? Because there was a whole bunch of red candles, so they'd keep selling, right? The professional would look at that and say, well, it's got to come up at least a bit. Ideally up to here, but, maybe it doesn't get through the 21. I mean, we don't know. But it should go up at least a bit. It's a 4-hour chart. And then what? A professional would be waiting to sell it either here on this 2155 or a little higher up in here, right? For this continuation this way. But what would an amateur do? They would start buying it up here, wouldn't they? Because they'll say, oh man, it's been going up for 2 days. I think I'll buy it. Well, too late, dude, because it's coming down. That's, again, if you're not waiting for something, then you don't have a plan. So, this is going up, but that was yesterday's trade plan. Now the interesting thing to me, the interesting discussion is what happens in here between the 21 to 55. Now, if it drops like a ton of bricks, guys, this is falling far and fast. So what was the swing? I know there's a lot of lines here. I hope you can look through them. Okay? But we had just talked about a plan, right? 2155 cross, as you can see right there. I know there's lots of lines, but there's a lot of analysis here. So right in there. What was the next part of the basic swing trade? That says the market is technically bearish. What's step 2? No, just on this basic swing, 5A cross. Down. Well, it's crossed up, so maybe if it crosses down here, you can give it a shot to the south. Okay? And notice what's also happening is it's kicking off the future 21 because the 21 is going to continue moving down in the future, and it's going to be a little bit lower, and it's going to do that. And I'll come back next week and say, see, you could have sold 21. And you're like, dope, I didn't even see the 21 there. Well, it's because it doesn't exist there now. Where do you aim if you're trying to shoot at a running deer? Yeah, you have to shoot in front of it. So that's kind of what's happening. You see the 21 up here. I see it already here. So if it's going to go down, I mean, it has to go down now. The next place, if it's going to go down, it'll be up in here. And I already have this marked, if you recall. That's what this part is. So I have a plan, right? I have 2 plans, actually. So you have to just aim in front of the 21 because it's a moving target, right? So the 5-8 cross, this is the 5 and the 8 here, guys. All that is a trigger. It's not a decision-making process. If you're a bear, you've already made the decision here. Or some other reason, right? But if you're using my moving average methodology, the combination of moving averages, okay, then you'd notice that we're on the trend, right? That we're at fair market value. The market is technically bearish. If it goes up and then down, then up, then everything will be neutral. All right, so we're at a crossroads, right? Drop below the 200 EMA, which would be bearish. Accelerating off the 21, which would be bearish, with price action falling in this new downtrend. Well, pretty easy. Okay. So that looks like a mess, but what it's measuring is similar to this, right? Can you see it? That's why it's still there. And this is the Forex market reversing. Okay. And since Buzz has my book, Buzz, what do I call this? How do I describe how the Forex market reverses? Because remember, I use neuro-linguistic programming to try to get you to remember these things. Come on, guys. You just bought it? Uh-oh, well, we're having a test. The Forex market reverses like an old man easing into a hot bath. Okay? And so this is replanning out. Now, fundamentally, you could say that there's a divergence in central banking policy, which should bring EURUSD down, if not now, then later. That's why we use technical analysis to time our entries. The traders report said that while all of this was going up, by the way, initial jobless claims 274, a little off target, but not bad. As this was going up, we didn't see any buying by large institutional investors. So we just suppose that at some point it's going to roll over and head down. So if we can get this lower, low, then this is very bearish for a long time. Okay? You see, guys? Let's go somewhere new. Aussie dollar. Boy, that feels neutral, doesn't it? So 4 hour says if you're a bull, you should get ready to buy. You're at the 200 EMA, which is the fair market value. The market is currently neutral. The trend is up and it's oversold. I would say still more likely to go up than down. Hourly is not quite ready. Hourly chart tells me that it's going to come down one more time and then head up. Drop into the 15. It's thinking about it. Now it just needs some level of support. So is there a psych level in there? Yeah, I'd like it to come down just a little bit more. Let's look at it from this point of view. I think that would be too low. Okay. Notice the 55's in control, which predicts the double bottom. So it says long here. So one strategy you could use is long the 5A cross up. And this is on an hourly. So 5, 6, 7 hours from now, maybe. Yeah, Ken, but we already know that. Who doesn't know that? See, remember, it's priced in. What we're concerned with is what isn't priced in. Like this big dramatic move in the EURUSD in the last month or so has to do with people had priced in a rate hike at the Fed, and that wasn't even expected. That, I don't know where they get this idea, but obviously that's what the markets thought, and they priced it in. Now they're unpricing it. They're pricing it out because they're like, whoa, 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 the Fed's not raising interest rates in June. I'm like, really? Well, I mean, just crazy. But so now they're unpricing it. So it's not the facts that matter. It's what everyone's worried about the next fact. I mean, in fact, if you look at what happened to the Aussie dollar when rates have been cut, it hasn't been dramatic. But the dramatic moves were when Governor Stevens from the RBA said the Aussie was overvalued by 1,000 pips, right? He said it twice. Each time the market adjusted by 1,000 pips. Along the way, they cut interest rates, but the deed had already been done. Oh, Fernando, all my moving averages are exponential except the 8, and that's simple. Okay, guys? So I would still be short Aussie, even though we're getting pretty close to the end for now. Right, so mark your charts up. Right, where do you see it? So I'd watch that area, but I'm a bear, as you know, but we're coming up to areas of concern. Let's go to USD CAD. Oh, sorry. Look at that. It's funny, Mark. I just noticed what you asked for. Anything for you, Mark? Okay. Let's see if we can remember. Oh, yeah. 5 days ago, we talked about going up here. Then it went up. If it was going to fall, it would fall in here. But if it broke to the upside, we'd buy the pullback. Oh, snap, it pulled back. No joke. We talked about it at least a week ago, and that there was 2 situations once you got to the top of this range. It either comes back down or it breaks, in which you buy the pullback and take the reversal. Correct? How many people are starting to get this inside and out, like absolutely burned in your brain? Yeah, it's starting, like we go over it so many different times, but I'm okay with that. I mean, now this is where people start to freak out. They're like, well, Wayne, did you know it was going to? No, any more than you. Okay, what I can tell you is what the analysis tells me. When you're at the bottom of the range, odds are it's going to go back to the top of the range. And it will continue doing that until the range breaks. So if it fell here, well, then I would sell back down to here. If it doesn't break, or if it doesn't return to the bottom of the range, then it breaks, in which you buy the dip, buy the retracement. It comes back to the scene of the crime. And then now you got to trade. I have that 1,000 times. Well, Fernando, I just saw your question. What's the reason for the 8 moving average? You know what? It's been 10 years. I don't remember, but I remember trying a lot of different things, and that made sense. And, you know, I don't know. It worked better. Yeah, I don't have much more reason than that. You know, probably what happened, Fernando, because I've used different combinations of moving averages, and for the longest time I used 60. I mean, I'm just totally self-taught, right? But I also used I probably used moving average, simple moving averages, and then moved over to exponential. But you know, the funniest thing though, we're talking about so long ago, Fernando, that like an EMA was like new. I mean, obviously people use them, but you know, it wasn't much longer. It wasn't having charts that automatically drew your lines for you and automatically did the algorithms and stuff were fairly new. And that traders, not just in currencies but in everything, paid money to have charts. It was like $150 a month for charts. And so a lot of things were fairly new. I mean, there were strategies like if the 20 crossed the 50, or if the 100 crossed the 200, or the 50 crossed the 200. I mean, but you know, a lot of these things were quite new. Like, you know, some people had mentioned recently, like CCI. Well, when I started, like Woody was running well, not, it wasn't even chat. What do you call it? A BBS. Woody was running a BBS for traders, and he developed a commodity index, the CCI, the commodity something index. I mean, it was a dude. MacD was Gerald Appel. John Bollinger is a real person that you would meet at conferences. You know, like, now they seem to be magic to people. They get their free charting system with their demo account. They log in, and there's 7,000 different things. But you know, I don't know. What I'm saying is that it was all new, and things were being developed. And I don't know. Even an exponential moving average was interesting. You know, it was interesting. Wow. So I might have started with simple moving averages, and then exponential moving averages, and then combinations of them. And you know, I used to overlap like RSI, 3 different RSIs over top of each other, and yeah, and some things worked well and some things were pathetic, and so somehow that simple moving average stayed. I don't really remember why. but it worked somehow. You know? But then after several years of monkeying around with technical indicators, oh, definitely trial and error approach. I mean, there wasn't anything else. But after I started finding some level of success, I started asking, you know, why does it work? And that's when you get to a new level in your trading. So let's say you just do everything I taught you and you find success. The next step is you're going to sit there and say, well, why is what Wayne taught me successful? What is going on? You know, what the wizard behind the curtain. Right? Why? And they were very interesting questions, and they lead you to a different place. Now, I spent a lot of time thinking about it and trying to see the humanity through the algorithms. Mark says, how do I define success? In Forex trading, I referred to it as, you know, becoming a professional trader. No, not really, Fernando. But I traded on a demo account for 2 years. So, you know, I think the definition of success is working hard to master your art, making enough money to quit your day job, and because your day job probably has consistency, like you're going to get a paycheck every 2 weeks, and you're going to get health benefits, and you're going to get a vacation, paid vacation. You're going to have to make more money trading than your day job because you got risk. You have a bad month at work, and your boss will make you stay late. You have a bad month in Forex, and you not only do you not get paid, but you lost money. So it takes, you know, so once you can get to that level, that to me, that's the success, where you're in control of what you do, you're the master of your domain, and you're happy. Well, so I did things like do a 3-year business plan and pro forma cash flow statements, and that's I started to really understand my trading at you know, almost a spiritual level, because I did so much work and I did so much focus, and I don't know, it helps to know who you are and where you're going and how to put it together, because you should realize that Forex is a get-rich-slow model, because you're going to have to become a successful trader. That is no easy feat. But you can't just show up one day and say, well, I want to be a brain surgeon because they make a lot of money. Well, first of all, brain surgeons work really hard, okay? You're going to need a lot of education. It's going to require a lot of investment of time and money. But at the end of it, you better enjoy being a doctor and actually enjoy studying brains. And you could just, when someone puts an MRI up screen, you see it and you get emotional tingles through your body. You're like, ooh, I could look at these MRI images all day. Because that's how I feel about charts. I look at charts all day. I look at the chart in front of us right now, and I love it. I mean, it's beautiful to me. And so it keeps me focused. It keeps me interested. Years go by. I love what I do. Oh, and if you're successful, way too much money. But that's a whole different thing. Like, that's just a consequence. But it shouldn't be the reason. You see what I mean? And to earn that level of financial success, it's going to require blood, sweat, and tears for years. And in fact, you're going to have to master your art, which, I mean, you're not going to be able to do it with it. And you're not going to master your art if you don't put in the time and the effort and make the mistakes and recover from them and understand them, understand your profession from absolutely every angle. And that's why I say, when you start to learn, focus on very, very, very specific things one at a time. One of the first pieces of advice I gave YJ, and I think YJ's in the room, isn't he? YJ, are you in the room? Maybe not. This is not alphabetical. Oh yeah, I think he is. Yeah. Yeah, he's no. Yeah. One of the first pieces of advice is I said, YJ, just do this. Look for double bottoms that make a higher high, and then buy the higher low, or the opposite. All right. Look for double tops, sell the 1, 2, 3, and do it at least 100 times. Okay? Do that 100 times until you've mastered it. That one thing. Start with that. Imagine that's all you did now is look for double bottoms and double tops and traded the 1, 2, 3 reversal pattern after they occur. That's all you did for 6 months straight. You didn't do anything else. And all you did was look for those patterns over and over and over again. Do you have control? Yes or no, guys? Do you have control? If all you could do for the next 6 months is trade one pattern, no matter what else you see, you're totally incapable of trading it. All you do is double tops with 1, 2, 3s or double bottoms with 1, 2, 3s. That's it. So control. So if you can actually do that for 6 months, now you're a trader that has control. And that control brings consistency. What if, after measuring your consistent behavior over 100 times, and you found out 73% of the time you made money? What would your confidence level be, knowing that 73% of the time when you make a trade, you make money? Not that you're successful 73% of the time, but the 73% of the time, the double top or double bottom with the 1, 2, 3 produces a profit. Is it because of your genius? No. You just know, based on the facts, that that's what that pattern produces for you, right? So are you confident in making that trade? Because you're consistently Right? Your behavior is consistent. In that particular scenario, your behavior is consistent. Plus, you've developed the skill of control. You trade on your terms. That's it. Okay? So, you have that now. Put that little pearl in the bag. Now let's try something else. Let's do a different pattern. And do that over and over and over again. And keep doing your double tops with 1, 2, 3s or double bottoms with 1, 2, 3s. Fast forward 3 years, you have 6 trades that you have confidence in, not based on some sort of, the TV convinced you, but the actual facts, the data convinces you that if you see one of those 6 patterns, you have the patience and the discipline to carry out what's required to be profitable. And that's all you have. The only thing you have in the world are those 6 trades, but you know that if you see one of those 6 patterns, you'll be profitable the vast majority of the time. Is 6 patterns enough? Yeah, it's enough, guys. So did I say you have to actually master everything? No, but if you could trade profitably for 3 years, you're probably going to trade profitably for 10 years. You see what I mean? You've made it. I think at that point, you're just going to get better and better because now you have the luxury of time for you to learn more about the fundamentals and the other things. I mean, it'll take time, but now you're a real trader, and time is on your side now because now you can do this forever. Thomas wants to know what 6 patterns. Well, I'm glad you mentioned that. I got a DVD series. My 6 favorite, no, the 6 most profitable Forex trading patterns that guarantee riches by Wayne McDonell. The DVD set is only $1,300. Yep. No, forget it. Ask me, this has been a long session. Ask me tomorrow, and I don't know. Oh, I'm going to be at FX Street tomorrow. Yeah, 3 payments of $1,300. It used to be 4 payments, but if you sign up now, 1 payment's taken care of, plus free shipping. So anyways, I don't know. I'm going to be at FX Street tomorrow doing this session. Maybe we'll talk about it over there. Maybe over the course of time, we'll go over some patterns. But I would start with double tops and double bottoms with 1, 2, 3s. I would start with that one. Yeah, and someone does also make a point. Another thing that's helpful to make a lot of money in Forex is you need a lot of money in your account. It's the same time every single day, 7 morning, New York time. So, you need to save your money. Okay. Why, it's not a simple pattern, but when they occur for a reason. So, you should have a reasonable amount of money saved in your account. Eric, Bollinger Bands are simply a measure of volatility. So feel free to ask sometime, we can go into it. I'm happy to do that. But this session's already for an hour and a half. That's a pretty long video. But I'm happy to go through that when I can spend more time on it. Cool, huh? A petrodollar? That's interesting. Yeah, I'm just trying to think of where I'd go with that. Yeah, we could. It's not something that I follow much anymore, but yeah, I'll try. Yeah. Oh, well, demeanor. Those are. Yeah, that's a complicated but very, very interesting question. Really, he says he's interested in finding out how the U.S. exports its inflation. Very interesting topic. But we should meet up in a bar. that seems like a 3-pint discussion. But anyways, hey, I got to jump, babe. I love you. See you over at FX Street tomorrow. Thank you for being a client of TradersWay. And this video will be uploaded to youtube.com. Please, will you spend a minute today and leave a comment on yesterday's video while you wait for today's? Would you do that for me? Just let me know you care, huh?